Welcome to the Big Biz Show.
I'm your number one fan, man. Woo!
Featuring insight and analysis that's second to most.
You don't impress me.
With Russ-T-Nailz.
Boogity doo.
And Sully something.
You think he's a real man while you're being tucked in.
Taking a professional look at the markets and investing and stuff through bloodshot eyes.
Ladies and gentlemen, it's just gibberish.
Now, here's Russ and Sully.
Live from the Tough Television Studios in sunny San Diego, California. Big Biz Show's on the air. We were just talking to our radio audience. I beg your pardon, our television audience. And now we pick up the live radio audience in 150 radio stations across the country. Thanks again to iHeartMedia, CBS Radio, Biz Talk Radio Network, and then our special broadcast that we do for the American Forces Network, formerly called Armed Forces Radio Network. And God bless our military men and women serving our country overseas and underway. And boy, what an interesting day on Wall Street today. Because I'll tell you, a couple of factors going on here. I know that my good friend Brent Wilsey doesn't care about this, and he's in studio today from Wilsey Asset Management. Brent, how are you, sir? Good to have you.
I'm doing great, thank you. I didn't know you guys are that big.
Huge. We're giant.
Kind of a big deal.
We need to put you on those stations. That would be a simple process.
Bigger than Ron Burgundy in San Diego.
Listen, I met Brent 19 years ago.
Yes.
On a small. Let me bring you back to a gentler time.
Here we go.
The year was 1993. Something.
Two.
Yeah.
Zero. Last one.
In a very small station that had a signal that went from here to that there. AM 1000 KCEO.
I have 1,000 of them.
Yeah. In fact, I think the tagline was "Round the corner from Witch Street Winery" or something like that. It was.
That's right there.
It had a signal. Actually, it was up in North County, San Diego. It had a pretty good signal. I mean, it wasn't giant.
No.
But I met Brent there, and Brent was doing a talk show on investing. And you know what's funny? I was talking to somebody the other day about you, and I mentioned that your philosophy in investing has not changed in 20 years.
Correct.
And that, but Keith, think about that. That's how you got to do it.
Yes.
Right?
Yes.
I mean,
stick to it. Get a plan. Get in there.
I mean, that's the way to handle it there.
Stay steady.
And Brent still is frequently on obviously television here and local television in San Diego. He does radio still, but
can he make your money grow?
We'll see.
We'll see.
We'll see. And his son is now our millennial business reporter, and I think the reason or business specialist. The reason we want that is because the time value of money.
Yes.
Brent and I were talking about this.
Yes.
You know, a 25-year-old has nothing. Right?
Right.
You know, a couple. You know,
plenty
he's
of
got
it.
a couple grand in the bank or whatever.
Because
Maybe
he
because
owes
he saved up
something,
everything he had.
Yeah.
But you know, I was talking to my daughter who's 23, then was 21. I said, you know, you guys work part time. You guys throw some money aside. You guys don't spend a lot. Why are you amassing $5,000 in your savings account? Why don't we move that? Why don't we keep $1,000 in your savings account?
Right.
Okay, and why don't we take $4,000 and put it over into an investment account? And why don't you guys figure out a way to put in $50 a week?
You know, and I know you're going to have him on pretty soon.
Yeah.
He's got some great stories about what he does and his friends. Will you have nothing in the bank? He goes, no, why should I? I don't need emergency money. You know, I'm not going to have.
And it's, by the way, when you invest, it's 3 days away anyway. I mean, let me tell you what that means is that if you have no, let's say you got $100 in the bank,
right,
and all of a sudden an emergency bill comes up and you don't have a credit card or something like that. If you have money in the stock market, you sell that stock and it's usually. They call it a something plus 3. I forget what that's called.
T plus 3.
T plus 3 means the transaction day plus 3 days.
Plus 3 days.
So you're 3 days away from your money anyway. So if you're in that bad of trouble, you know, call your pop-up on Tuesday and say, I'll get it back to you on Friday.
That's a good idea.
But you're right, because that means money is sleeping for him. If it's not working for him, it's sleeping. And that's his philosophy, right?
Right. And he goes, I don't need it. I don't need emergency money. I can wait next week till I get paid again if I need it.
Right.
Or I can sell something there. But he goes, why should I keep money in the bank at 0.1% and have it there? I don't need it there.
That's right. And that's another reason why not to buy individual stocks, either for the long term, at least on your own, because you need to use somebody like Brent Wilsey, but because keeping that money in the bank at 0.01%, would have been better than Apple this year. So, which is which I think illustrates both of our points nicely.
That's the scary part.
You don't want to be an individual stock, and you don't also want to hit it.
You got to know what's going on.
Let's talk about that, though. Talk about that strategy. We've got a market. You're making money this year. Amazingly, your returns are as usual. What they always are, if not better. But the rest of the market is down.
Yeah, we can't talk about returns because the SEC and so forth. But by buying these good quality companies, you do well. And if you are down at a certain point in time, you're still collecting the dividends. And you should never invest, for 6 months or 12 months. Say, well, I need this money in 12 months. Don't invest. but you should look longer term to say, well, where am I going to be now? And it's funny, I got a call from a client. He's been with me for, 20, 25 years. He goes, Brent, I turned 65. I think I need to pull out of the market. I go,
why now?
Yeah, I go, why? Well, you know what I'm saying? I'm 65. I'm old now. I go, you come to our client events. Our average age is probably 75 to 85. In today's mortality, you're going to live probably another 20 years.
Yeah, right.
Why do you need to sell?
Right.
Well, I'm 65.
Well, I don't know. I'm 65 years old.
Right. I go, that's not old this day. What is it? 65 today is a new 55, right?
Oh, at least.
At least, yeah.
Okay, so all right. So here's my question for you, because Brent and I are going to do a real life experiment, and I'm not going to tell you what it is yet. We're going to tell you what it is later on, but it's with real money. Okay, and it's to prove a point. Yours.
Am I in here?
Your money. It's your money. By the way,
We should put wrestling.
like everyone here is pooling in something so we can do it. So Brent and I can risk your.
You know what? It's too low dollars for Rusty.
Yeah,
I'm big
He's
bucks.
big. He's
Yeah,
big.
yeah, he's big
But
bucks.
the point I'm trying to make is I think the argument we're going to make is the other direction. So he is 75 years old. He's been with you for 50 since he was 50 years old, right?
Oh, the guy I was talking about? No,
Yeah.
he's 65 now.
65. He's been with you 45 years old.
Right.
45 seems like a late time to start, but that's a proof that it's not too late to start, isn't it?
That's right. Yeah, you're right, because he didn't have that much when he started.
Wow.
So 45, 55 years old, people think, oh my gosh, I'm in trouble. Well, you're going to have to put your nose to the grindstone. You're going to have to do it,
Right.
but you can do it.
Right.
And there's never a better time in your life than between the ages of 45 and 60 because, study after study shows those are their prime earning years of your life. You don't usually make a lot of dough in your 20s and 30s and early 40s. And suddenly 45 hits, you got about 15 years of good wage growth there if you plan on retiring at age 60. And you got 20 years of good wage growth if you're planning on retiring at 65. And what's interesting is that I would love to prove that point. I hear so many people emailing me saying, it's too late. What am I supposed to do?
Yeah.
Well, you're just supposed to stop down and do it.
Right, exactly.
I don't care if you only have $5,000 to your name and you invest it. I guarantee you that you can find some money to invest every month. I've done this a million times with people. So list out your expenses. I'm talking every pack of sunflower seeds you buy at 7-Eleven, everything. And there's always money there.
And how many people go to Starbucks twice a day,
Yes.
smoke a pack of cigarettes? I mean, they spend $20, $30 on stuff they don't even realize per day.
This is where Coinstar can come in handy at the grocery store.
Remember the
Dump in the jar. Look at that.
Well, remember the latte
Their fees
factor.
are high, though, eh?
Are they? I don't know.
think they are.
Remember the latte factor.
I counted myself.
The latte factor is saving $5 to $10 a day is what you're doing.
Yeah.
They're really thinking, and for some, it's impossible because they live paycheck to paycheck. But do they really? Because $5 to $10 a day on lunch in Starbucks. If I'm not mistaken, if you put that into a retirement plan, that becomes $150 a month.
Right.
$150 a month is $2,000 a year.
And
$2,000 a year over the course of how many years?
Right.
If you're 35 years old, it's $950,000 at a horrible rate of return by the time you're 65.
Right.
Think about that. That's 30 years saving $150 a month.
And you know what you forgot about?
What's that?
You said retirement account. You put into an IRA, you get a tax deduction.
Yeah, right.
So you're not putting in 150, you might be putting in 100 after tax.
Yeah, that's exactly right.
So, it's a great deal. And I tell people, it is the best investment you can do, an IRA or a SEP IRA. You'll go so much farther than buying a house or doing anything else because of tax benefits.
What are your thoughts on, a Roth versus another?
Roth IRA is when you pay the taxes up front, so you don't have to
You
pay
get
the
Seems
no
other.
tax
logical
deduction?
because it's a smaller amount, right?
Well, you mean with a tax deduction?
Yeah,
Yes,
no.
Well,
yes.
no, that's if you put $2,000 into a Roth IRA, you're paying taxes on the $2,000.
Right, you pay tax on the 2,000,
Right.
but when you pull it out, it's tax free.
Yes.
Now, what I tell people,
It's a bonus.
no.
No.
No,
You slap me.
don't talk to Brent like that. We told you about this.
You don't have a pocket, so you can't talk that way.
All right, so what's the downside of a Roth IRA?
Okay, do you trust the government?
No.
Okay.
No, that's why.
Wait, let me
20
think about it a
years?
second. No.
You know, the talk today is Back to the Future because it was a date.
Today is Back to the Future
Back to the
Day.
Future Day.
That's right.
And they're talking about these things. Would you trust the government for 20, 30 years?
No.
That they're not going to step in and say,
Oh,
you know what?
sunset provision on the whole deal.
Oh, exactly. They're going to change things because they're going to need money. And you know what? Rush did such a great job. You got $1 million in a Roth IRA.
Oh.
You know what? We're going to tax. There's even talk now about taxing tax-deferred accounts that are over $2 to $2.5 million. You done so good? Oh, we got to tax those.
Yeah.
Don't trust the government. If you do the tax deduction now, they can't come back 10 years, 20 years from now saying, oh, we're going to take that away from you. but they can change the tax laws and
Oh,
say,
great
job, we're taxing on that money.
Oh,
So what's the fail-safe for IRAs? I'm going to keep you longer here. As you know, we haven't even gotten to your topic yet. So is there a fail-safe for an IRA? Is this a standard IRA or
Just do a standard
SEP IRA or something
yeah,
like that?
do a standard IRA. If you have a small business, you do a SEP IRA, which is a great thing. You can put up to $50,000 a year into SEP IRA if you're in a high
You can
dollars.
hide that money.
And you can hide
I mean,
that money.
what I'm saying, you're not hiding it. What
No, I got you.
you're sheltering
You're
that money
sheltering
from
it, yeah.
taxes, right?
Yeah.
What is the most amount of money that someone can shelter using all of the bells and whistles? Is it $50,000 in a SEP IRA? Is there other? If you have a SEP IRA, can
Right.
you also put money into a 401k? Let's say you have a part-time job somewhere else, or is it one or the other?
Yeah, well, it's one or the other. Depends on your income and so forth. So you get into tax rules. There's other things too called defined benefit plans, where sometimes you're like a doctor at 55. You've got a high income, and you say, you know what, I haven't saved for retirement. I'm making $300,000 a year. I want this for my retirement benefit. You can then get a tax deduction on maybe $200,000 a year of your income. So it gets kind of complicated.
This is why you have Brent, though.
Yes.
Rusty. This is why, because he will navigate through those waters for you.
yeah, it does get thick.
No, it really does. All right, so we're going to talk about.
Your little plan. And who came to San
No,
Diego?
we're not talking about that plan. He and I are talking about that plan in the month. We'll start at the beginning of the year. We're going to talk about my plan that I'm trying to pitch to Brent, which I think he'll do because he's going to make some dough out of it.
They wanted to win a medal in curling until they found out it had nothing to do with lifting beers. It's Sully and Russ on the Big Biz Show.
That's right. Big Biz Show, bigbizshow.com. Great to have you along today. Brent Wilsey in studio with us, and a little technical issue coming on the last break. But I was ready to say,
Yes.
before we went off the air, that Ferrari, Brent, Ferrari did an IPO, an initial public offering. Let me take a second and explain. There's only two times in the universe of a company that they actually receive money from the public who's buying stock. One time is during an IPO, and if there's ever a secondary offering, they get money from those proceeds. But keep in mind, a lot of people think, and what's really interesting to me is when a stock goes up, the company gets that money.
Right.
The only way to make a stock go up is more buying of the stock than selling of the stock, and it's an auction. People
Right.
are like, in other words, if I sell a share of Apple, Brent buys a share of Apple. That's the transaction.
Hey, but doesn't the company hold on to some shares?
They can.
Well, they can.
Oh, okay.
The real benefit to the company is this: is that the CEO serves at the pleasure of the board of directors, who serve at the pleasure of the shareholders. Shareholders are happy when stocks are going up. Okay.
Well, yeah.
The only reason stocks go up fundamentally is when the debt is low and the revenue's high.
They're making more money.
And they're making more money.
Make more money.
That
You
right?
want to buy that. It's a market.
Okay, show's over. I think
That's
we
it.
covered it there.
That's it. So, having said that, Ferrari does an IPO, and how much did they raise on that IPO? Do you have any idea?
Here's the twist.
Okay.
The twist is Ferrari was not by themselves. They were owned by Fiat Chrysler.
So Fiat
Chrysler got that money, and it was about $896 million.
Almost $1 billion
Almost
on
$1 billion. They only spun off 10% of the company. The thing that I looked into just very briefly, because I'm a big Lamborghini guy and exotic cars and so forth. I think, gee, maybe I'll buy just 100 shares just to have it. I looked deeper in the company. Their debt has gone up 400%.
Oops.
And the last year, exactly, oops, a big oops, to about $2.6 billion. And also,
This sounds like a bailout to me.
Oh,
Ferrari.
well,
The money coming in, that sounds like more of a bailout than an IPO.
well, the guy that runs Fiat Chrysler is a very smart businessman. So what he's doing, he's spinning off Ferrari, got the $896 million, and then the beginning of next year, he's going to spin off the other 80% that they hold, and then Ferrari's on their own.
So right now, do you own a hunk of Ferrari or a hunk of the bigger company?
I own 2 Lamborghinis.
No, not that. the Fiat, the parent company.
No.
Or
Oh,
is
so
it
if you buy
Ferrari?
it,
Yeah.
if you buy it right now,
Yeah.
you can buy Ferrari stock. Now, it's actually not called Ferrari. Well, it's called Ferrari
Race
NV.
or something.
What is it called?
Well, it's Ferrari NV, and the symbol is race.
Yeah,
RACE, right.
All right.
Yeah,
Take a look. Can
so-
we pull that stock symbol up, please? RACE. What you're going to see is something, a straight line going up, I'm sure.
Actually, no. It came out around 50, went up to about 60, closed on 55.
Okay,
21
interesting.
million shares changed hands. A lot of trading and that and so forth.
Yeah.
But it's and I had some clients call like, hey, I'd like to buy. I said, no. They've increased their debt, not a good thing. and you're going to have this massive flux of shares coming in the market next
Which is
year.
going to, right, exactly.
Right. So you might be able to buy it at 25.
Yeah.
Oh, and Ferrari also said they make 7,000 cars a year.
Yeah.
By 2019.
There's your 1 day of trading.
Wow.
That's
Looks good on that, doesn't
well, I'll
it?
tell you,
That's gonna be a good morning.
Let's put that in the annual report. And go from there.
And then
Let's
we're
show
done.
Show that to my wife.
Look at the growth on Ferrari.
Wow.
Isn't that fantastic?
Isn't it amazing
Unbelievable.
That's what
how
happens.
deceiving charts can be?
They
You see
can.
that?
Yeah.
Like, oh,
Yeah.
wow, that's pretty
That's
good.
why you have to take it. And, I mean, it's just so funny. Oh, Ferrari stock's going through the roof. Did you
Yeah.
see? Okay,
So
let's
you're
take a
saying
look
it goes-
at it 6 months from now.
And in 6 months, if it's down 25, would shorting have been a good idea somewhere
Well,
in there?
shorting's never a good idea unless.
risky,
Look at you
risky.
two squeaming. I'd love to make you look that way.
Listen. I will play the short game.
Yeah, you've
if
done
I take,
shorts.
well, but I do it with like $500.
Okay.
I'm not taking a $50,000 lump of.
Yeah.
I mean, but by the way, there are guys that do that. There.
Oh, there's guys that do that. Actually, that's what happened to.
I think that's what happened to Weight Watchers. Honestly, do you hear Weight Watchers? You know, Oprah Winfrey bought 10% of that company for $43 million.
Right.
She bought it at $7 a share, went up to $13. That stock has dropped 70% this year.
Right.
I think that was a short squeeze. Short squeeze we explained the other day.
Were
as well.
kind of we were kind of looking at buying Weight Watchers, and I didn't pull the trigger on it. She buys it, stock goes up 82%.
Right.
Yeah.
But it was it
Good one.
because of Oprah, or was it because of the short squeeze, or was it because of both?
I
there's a
think
lot
because of
shorts on
Oprah,
that.
because
You
she
think
bought
so?
10% of it, and just think about Oprah. She puts her name on something.
That's true.
You read a book, she
Yeah.
says it as a bestseller.
The Midas touch.
The Midas touch, exactly.
It really
She has it.
Oprah's going to have a
and-
muffler shop someday.
Well,
Thank you, Midas jokes. How you doing?
Wow, thank you. Appreciate that.
Oprah's muffler. Yeah.
Thank you.
Midas touch.
Thank
Keep
you,
going with it.
anything she touches does
Yeah.
fine.
Okay, so I'm watching a. We used to do some stuff on Fox Business. They still run some of our stuff, by the way. They were talking about this newsletter called the Smart Investing Newsletter, and I'm pulling it up. I say to Brett on the commercial break, Brent, have you seen the Smart Investing Newsletter? What is Brent's response to me?
I wrote it.
I wrote it.
Yeah. So yes,
I didn't
to
catch
answer
the
your
byline
question.
at the top of the deal.
Yeah.
Talk about your Smart Investing Newsletter that we never talk about.
Well, I mean, we've been writing this for, gosh, I want to say 10, 15 years, and it always talks about different things. I try to help educate investors in about a 750 to 1,000 word thing. It used to be in the paper,
Yeah.
but the paper been around for 100 years, folded. So now it's just a straight newsletter again.
Sure.
But it's things to inform people about investing. This last time I talked about, I actually read this book, great book called Fooled by Randomness. Every person that has money should read this book.
Nassim Taleb or Nassim
Yes.
Taleb, right? Yeah.
Yes.
Heard of
Yes.
him.
Yep. Great guy. Does not like to do public radio. Does not want to do TV. He just likes to sit down, write books. Very smart man. And the things he comes up with is why people are scared in the market. And and this newsletter again. And get my website. We always show my website. They go to my website. They can sign up for it there. But again, I kind of summarize the book.
Fooled by Randomness was
Fooled by
his-
Randomness,
right.
yes. And he talks about one of his great stories. Yeah, you just go to the website and you can kind of pick it on the media. I think it's right there. But he talks about how he was a trader in Chicago,
Right.
and he had a neighbor that was one of these high flying traders, and he was doing great and bragging about his wife with a 10-carat diamond ring and the Mercedes and
The
everything
boats
else.
and the trips and
And this went on for years. And the author, he was more, more subdued and so forth, saying, I'm going to do slow and so forth. He went out to go to work one day and looked across the street, and there's his neighbor sitting on the steps, kind of smoking, real distraught.
Oh, God.
And he goes, "What happened?" I lost everything.
Yeah. This is 2009.
2008? I don't remember the year.
Lost
So what-
But the
everything.
thing
Lost
is,
the whole thing.
people don't know what they're doing, and because they think they're doing well, it's not because of anything they're doing.
Right.
It's because of the randomness that they
Right
did.
place, right time. I just accidentally
Exactly.
bought
See, I
Weight
call this
Watchers
the
2 weeks ago.
NFL player effect. These guys go from I don't have any money to I have a lot of money, and they don't realize this is a 3-year job.
Yep.
And they think
yeah.
think it's a 20-year job.
Yeah, who's
And
our
that's-
linebacker? The linebacker that happened to. What was the big thing?
Several of them.
Yeah.
Lyle Alzado was one of them. So, so interesting. Last of all, talk about energy stocks today, because energy stocks are I mean, the gas world is taking a pounding, but energy stocks are interesting because I saw. In fact, I'm starting to look at fundamentals and looking at debt. A couple energy companies have no debt and they're doing pretty good.
And to me, this is like gold in the oil companies. And I'm seeing things that people aren't seeing. They're saying they're not going to have earnings. A lot of these estimates are negative. Some people still think oil is going to go down to $10 a barrel. That's not going to happen. What I look at, one company called Atwood Oceanics, symbol ATW, the price to tangible book value is 0.39. That means that you're paying 39 cents on the dollar for tangible assets, things you can touch and sell. 39 cents.
Is that a
on
good
the dollar.
number?
That's a great number because you have companies trading at 4 or 5 times book value, tangible book value.
Wow.
So you get this for 39 cents on the dollar. They have a current ratio that shows how cable they are paying off their bills.
Yeah.
3.2. They can pay off 3 times their bills over the next 12 months.
Oh, that's a good thing to look
with
for.
a current ratio.
Can you stay? Do you have one more? Do you have a little bit of time to get out?
I can
Let's stay
stay
here.
all day,
Brent
yeah.
Wilsey. We're making money and we're freaking being educated here.
Can he help you make money?
We'll see. Show. Don't do that.
I know, it's so funny, though.
BigBizShow.com. You can see him like, bus side of a bus stop. Don't do that.
It's going to be catchy, man.
He's incredible.
Trust me, I should get a percentage of all the upkick in his business.
Take it.
Don't do that.
Here, how many solar companies are public now?
But a ton. I hear a lot of commercials.
Oh,
okay.
But you don't. But it was in vogue about 4 years ago.
4 years ago,
right?
and we kind of looked at First Solar. I remember they were on $15 a share. I picked it as a good buy in my newsletter.
Yeah.
Went up to about 100. I think now it's probably back down to
like 18,
maybe 18,
something like that. So.
I don't get that. See,
Well, because there's a sunset provision on credits that is going to kill this industry in about 6 months.
Oh, no pun taken.
And also,
See what you did there.
Carbon.
Got a funny there.
right.
Hey, I want to talk a little fast food with for our good friend Curtis Matovich. Curtis Matovich is our sound editor, and he's our lead editor here at Jump Television Studios. But here's the deal: I want to just 6 months ago, Brent, McDonald's looked like it was in a free fall, and sales were declining, traffic was declining. Mm-hmm. They were getting their butt kicked to Chipotle and Shake Shack across the country, and then suddenly,
I loved it.
Steve Easterbrook, who's the CEO, said, "Let's do breakfast 24/7.
Yep.
Let's do breakfast all day." And that was a pretty bold move. I don't know if that's the reason, but I'll tell you what, McDonald's shares have jumped 11% this year. That's not a bad deal. What's going on there?
They've kind of turned the corner. Good management.
Chipotle did not, though.
Chipotle did not. Chipotle actually, they reported today, and they have a problem. Their same-store sales last year for the third quarter 2014, they're up like 19.8%. This year, 2.6, slowing down. Again, I always said burritos. You're way overpaid.
They don't serve breakfast.
Here's my problem.
There's your Chipotle problem right there. Ever.
Ian, do you eat at Chipotle?
I'm loving Chipotle.
What about you, Janicus? Yeah. He likes I do because he's got a kid. Right. Curtis, you Chipotle, man?
I've never been in it.
Yeah. Do you like it?
I like it.
I don't like it. You know why I don't like it?
No, what?
I'm eating off a bad paper plate. I mean, if they would just make those the pulpy plates out of plastic or something that's non-recyclable, that'll kill people.
Well, get the burrito and go home.
But I'm just telling you, I'm just like, I pick the thing up and it's like,
okay.
Oh, here's my plate.
I'll talk to somebody.
And it goes like this.
Well, that's that salad one you get. You load that up and just eat the salad.
It doesn't forget the salad. You put wet beans in the bottom of a paper towel, what's going to happen?
You put wet beans anywhere, it's going to happen.
See, and this is what people do. People buy the stock because they like the burritos.
The food.
Well, wrong thing.
That's the wrong thing.
Wrong thing.
These are all the things that I hook my wagon to, and you're telling me I suck on every one of them.
They're stock at a high of 750. It's now around 660 or so. You're paying 33 times forward earnings for this company. Yeah. They are trying to come out with new concepts. They have
How about breakfast?
Well, not breakfast. I don't think so. They have one called Shop House, which shows you build your own Southeast Asian cuisine
with wet beans. All right.
Pizza Locale.
Wet Bean Wednesday.
Nothing on breakfast. So maybe they're missing the boat there.
Tell them. Hey, Chipotle. Crack a couple eggs.
Now, listen, McDonald's has turned into a turnaround story. I wonder if Chipotle will. Because honestly, if you think about where you think it's too expensive.
Yeah, it would have to fall down.
How much debt do they have? Is that horrible on the books or just?
I didn't check the debt on that.
We should check it out.
Oh, boy.
But it's too high. It's too priced right now. It's still a momentum type stock, which goes on the momentum.
Yeah.
So it's got to come down, be a turn on story. It'd have to go down to probably like $50 to $75 a share. Then it'd be a turn on story.
One
then
last thing before I let you out of here today. If Apple needed the money, as if Apple needed the money.
All right.
Tim Cook's about to add yet another $1 billion business with their Apple Music. It's got 15 million subscribers to it already. And you think about that, of the 15 million, 6.5 million are paying customers because they gave a lot of people free stuff. But do the math. You got 6.5 million times $10 a month times 12 months. That's $780 million. Okay. Where do you stand on Apple? I mean, is Apple just something that we all should have, or is it a buyer beware?
Oh, Apple's back on our buy list because they were about a high of 130. They're in a whole category. They fell back down to about, I think, 105. They're back on our buy list. I'll give you a little tip. We'll buy it up to about 115. It's around, I think, 113 today.
So the reason you don't just stay in it and hold it is because you're trimming the sales. You're saying, okay, I like Apple to here, but if it starts coming back here, I don't like this. I'm getting out of it and putting it somewhere else. Because you're constantly trimming your sales, right? This is not just a set it and forget it type.
Yeah, see, because we do what's called an individual concentrated value portfolio. Every account that we have for people's individualized. So what we do is that I own an Apple in my portfolio. I think our average price, I'm going to say around $40, $50 a share. But for somebody new coming in, if Apple's at 120 and our target sell price is 150, there's not enough room for error to buy that stock. And this happens to people all the time on Wall Street. They step in, they'll buy a company, and it goes down. Well, because they bought it, the next day the analyst back in New York said, it's now a sell. Oh,
Yeah.
why don't you give me some warning? So we give people warning. We'll put on a hold list before we buy it.
Yeah.
And real quick, I know we got to go, but Carl Icahn came out today, $150 million for a new PAC to work on this tax situation for companies to bring back their money
Okay,
overseas.
right? Because corporations are taxed at 39% here in this country. And Carl Icahn, of course, a legendary hedge fund manager and unbelievable investor. We'll see.
Elvis was taxed 90% of
Was
his
he really?
income.
Really? 90%.
90%.
Probably lost 90%. How can he be
Taxed 90%.
How?
That's why he gave a lot of it away.
That's real. I don't. How can that be?
Philanthropic. He was the man.
Well, back in the 60s, it was a 90% tax bracket.
Was it really?
Yeah, it was ridiculous. Yeah.
90.
Thank you so much, Brent Wilsey Asset Management. We'll see you next week, buddy. Appreciate that. Good
And if
stuff.
Elvis were here, he'd say, thank you.
Go to his
Thank you very much.
website, WilseyAssetManagement.com, and check that out, and also pick up the newsletter.